The Real Investment Show.
All right, midterm elections, 35 days away if my count is right, maybe 34, 35. We're getting there. Big question, of course, is how do midterm elections affect stocks? That's really kind of the big question, particularly, given that stocks are already down, fairly sharply this year. Now we've had a very nice rally the last couple of days, but midterm elections approach. And again, regardless of, political leanings, history has a pretty clear, kind of definition of what happens with, coming out of election cycles, whether it's a midterm election cycle or a presidential election cycle. Can we get some clues from that, Danny, and something that, Danny brought into the show today to talk about? It's kind of an interesting thing coming up because one thing that markets is they actually like gridlock.
Correct.
More than anything else.
Yeah, and that's the big thing. I think that many people typically make investment decisions depending on who's in office, what actually happens between the House and the Senate and the presidency. And so many times we leave a lot of money on the table. And more often than not, just when we place our political agenda ahead of the markets, many times it doesn't work out the way that we feel. I mean, I know a lot of people that got out when Obama was elected, and we saw markets run. Now you had to think about where we were economically at that time. Coming out of 2008, we had the wind, behind you, and you had a lot of policies that were pretty pro-business friendly at that point. Yeah. Now, same can be said. A lot of people got out of the market when Trump was elected.
Yeah, no, I was just about to say that. I was actually down at Fox News on election night. Stocks are down like 1,500 points, right? I mean, the markets
in the middle of the night, it was nuts.
And Trump's elected, markets are crashing overnight, and then the next morning they take off like a scalded ape. And so if you sold, you missed a huge rally that occurred right after that election. But again, this is what markets tend to do, right? They tend to do exactly the opposite of whatever you think they're going to do.
That's exactly right. And so, the markets do like gridlock because not a lot of new legislation is put into place, not a bunch of additional red tape. I mean, think about it. If one party wins, typically, both the House and the Senate and the presidency, you've got a clear path to legislation. Mm-hmm. And so that can be problematic in the sense that now companies are spending a ton of money on attorneys, on R&D, on how to switch gears, or not spending money on R&D, they're spending money on compliance and red tape. Right. And they're switching gears. So now they don't see that growth that they historically would because they're spending all their time and energy on something just to make sure they're compliant, not something that actually grows their business or sales oriented.
Right. And that's just based on assumptions too, right? So if one party wins the House, the Senate, and the presidency, and all of a sudden they go, oh, that's going to mean tax hikes.
Correct.
Or that's going to mean, a lot more regulation or red tape or whatever it is. Then, yeah, you're right. I mean, they're going to be focusing on how do I defend myself against that. Correct. They start laying off employees. They start taking defensive actions, whatever it is, whether or not that legislation ever even gets passed, right?
Well, and even right now, I think the big concern is, what if Democrats take the House and the Senate? The clear path to tax hikes, clear path to more potential stimulus, which is inflationary. But, a lot of political pundits are out there saying this isn't the clear path that many people think because you have Senator Sinema and Manchin right now who've really been probably a thorn in the side of the administration from being able to get a lot of their agenda items done by requiring things to be taken out or included. And, or just saying, hey, we're not doing it all together. Now, I feel like recently they've been a little bit more amicable towards things like the Inflation Reduction Act. Right. And so, look, these are all hypotheticals.
Because they had huge benefits out of that.
Yeah, of course. Anybody can be more amicable and say, send some more money to my constituents, right?
Exactly. Sinema voted for the Inflation Reduction Act when they got rid of the potential removal of the carried tax for hedge funds, pension funds, et cetera, which are a lot of her supporters, right? Yeah. So once they got rid of that carried interest loophole, or were backed off of getting rid of the carried interest loophole, she was able to vote for it. And so, but again, historically speaking, the best returns for the markets come out of where one party controls the House, one party controls the Senate, and it doesn't really matter who's the president, right?
Correct. Because they're not making legislation.
Exactly. And so when you have a gridlock, that's better for the markets historically, because markets can say, okay, nothing's going to happen over there, so I go focus on my business, right? I can deal with whatever is in the economy and already passed right now. So whatever the current tax rate is, whatever inflation is, whatever regulations are in focus or in vogue right now, I can deal with those, and I'm going to run my business because nothing's going to happen coming out of Congress. So actually, one of the best outcomes for a midterm for the stock market would be Republicans take the House and the Senate remains 50-50, or even Democrats pick up one seat in the Senate. Because again, that gridlock will be good for the markets, because what you won't get is you won't get any more tax hikes or tax cuts. You won't get any more stimulus or not, depending, unless we get into a really deep kind of recessionary environment. You can get Republicans and Democrats all agree on a stimulus package. But more likely, you're not going to be able to pass any more, big climate change bills or whatever. Those will be dead, at least for the next couple of years.
Well, they're going to have to be very mindful as far as what the stimulus looks like as well, where, they blanket stimulus payments to everybody, really. I mean, if you think about it, anybody made less than 150, everybody's getting a check. And so those Treasury direct payments stopped, and now we're seeing that, there's bigger issues at hand. So I think that they're going to have to think about, okay, what happened last time we did this during the pandemic? And now, granted, we're in a different scenario. Supply chains are much different, but I think they're going to have to be a lot more thoughtful.
Well, that's true. And look, we did do, it was interesting too, we did the payroll protection programs.
Correct.
Right? And now we're finding out, and just raise your hand, even if you're driving, if you're surprised by this next statement, we're finding out that billions upon billions of dollars were fraudulently extracted out of that program. Well, of course they were, right? I mean, you had whole groups of people that were just forming fictitious companies to get payroll protection loans, because there was no, we just threw this program together and stuck it out there, and we said, hey, we're going to help all these people, but there was no way to monitor or to validate or anything else, right? We're just throwing money into the system. Same thing with the unemployment benefits. There are rappers now in jail because he was, coming up with fake IDs, all kinds of unemployment benefits. Yeah. But, you start throwing out these big stimulus checks. There's always going to be people that find their way around the loopholes to, fraudulently access, a lot of the money. But this is also why we have inflation. And to Danny's point, if we go back to this kind of modern monetary theory idea that we're just going to issue checks to households again, and we will, by the way, don't get me wrong. This is now in the playbook, right? So what's the playbook for the Fed? Every time there's a recession, cut rates, do QE. What's in the playbook for the federal government, regardless of party affiliation? Checks to households, because we did it and it worked before. Now, the only thing that may deter them, if they can connect dots, is to go, last time we did this, we got raging inflation. So maybe
that's if they can connect the dots.
Yeah, if they can connect the dots. And again, if they're not up for re-election, because again, that buys votes, right? Us in checks households, it gets me reelected, makes everybody happy. But yeah, so we'll see what happens next year when we get into, if we do get into recession next year, we'll see what, kind of what the initial benefits are. But again, if inflation is still running pretty hot as it comes next year, I think it's going to, which we'll see. I don't think it will be, but
do you think that it changes people's mindset, where historically they want the handout, and now maybe they say, you know what, that handout wasn't worth it?
No. If you're living paycheck to paycheck, Danny, and somebody says they're going to give you money,
you're not thinking about that.
Yeah, and how many people really are connecting the free money they got to the inflation they have now? Right?
Very few, I'm sure.
They don't, right?
Yeah.
So they look at, most people, and again, I'm not saying that.
Well, at least the people whose votes are going to be bought.
Right. Well, but no, I think, look, I talk to a lot of people, right? And they're like, well, gas prices are causing inflation, right? Or food prices are causing inflation. Okay, but what caused that to go up, right? Well, we shut down the economy, so we didn't have any oil production, right? Well, no, that's not what happened. There's most people see just the effect. Mm-hmm. They don't see the cause. And so they don't connect those two. All I know is I got free money, and all I know is there's inflation, and they don't really connect those two dots together, which is unfortunate, because that's why we keep falling down the same trap of doing the same things over and over again, expecting a different outcome.
Yeah. Well, nobody wants to look at the balance sheet. Nobody wants to understand their own household for that matter. So why understand how it works, that trickle down effect?
Right. Well, and again, what do you talk, when you watch the news, who talks about this stuff, right? This is boring.
We do. Everybody's like, click, turn it off.
What's much more important is Kim Kardashian now having to pay $1 million to the SEC for a cryptocurrency promotion.
I was just thinking about that. Like, what in the world? Think about the power that she wields, right?
Yeah.
I mean, it's amazing.
Yeah.
And for what?
Yeah, she got paid $250,000 for the promotion. Only cost her $1 million to do it, but she's only worth $1.2 billion. So who cares?
Yeah,
it's a drop in the bucket. If I had $1.2 billion, have $1 million all day long. Next.
Yep.
So, because again, that's free publicity. How many people started following her on TikTok just to find out who the heck she was if you didn't know?
I know who she is. I mean, I know her name, but I don't know what she does.
Right. Well,
I mean, I don't care.
You have to go to Hulu now to find her. So.
Okay.
Yeah.
I don't have Hulu, so I guess we're out of luck.
Started with a video. And we'll leave it there to wrap up the show. Anyway. All right. Get by the website, realinvestmentadvice.com. Danny Ratliff, thanks so much for joining us today.
Thanks for having me.
Just needed to have a fun day today, I guess.
Always good.
Get by the website, of course. Our latest articles are out, as well as our daily commentary. 3 minutes of markets and money be coming up right after the break.